how, I mean, we know they rigged it through the plunge protection team, but we don't know how, or maybe you do, how were they able, and we've confirmed this, to block out 90+% of traders and day traders and even people on the stock exchange? How did they lock it down? What was the mechanism for that 10, 15-minute period to just lock everybody out? And what is their mechanism to go in specifically? What's the instrument through the plunge protection team? What happened yesterday? And if they can shave points off for themselves at the source of the river of money, then is this signaling a new level of insider trading and control when they just lock the whole stock market down for themselves?
Well, it is a new level, and I must admit I cannot describe how they've done that, and I just don't know. And I think the guy who could tell you is Max Kaiser, who has worked on those programs, and he would be the one to be able to describe that.
Yeah, let's get Kaiser on Sunday or Monday. Emergency call to Max Kaiser. Good point. Go ahead, Bob.
And so I can't answer the question because my knowledge only goes so far. And I don't know how they did it. And I don't even know who did it. I don't know whether it was government or it was Goldman or who it was.
Now, how does the plunge protection team work?
They have people watching the markets. They have direction. It's just like the Fed and the Treasury tell. See, there used to be 21. There's now 19 brokerage houses that work with the Fed and the Treasury. And each morning they have a conference call, and they're told what to do in the market. A brokerage house A, you go in and you make sure the price of gold goes down $3 today and silver goes down 15 cents today. Brokerage house number 2, you make sure that the Dow Jones Industrial Average is up at least 20 points today. Brokerage house number 3, we want you, because copper is leading the pack in the commodity market, we want you to knock it down 10 or 15 cents if you can. And they supply the money to do that. And that's going on in every market in the world. These people are all professionals, and so they're rigging all the markets.
And giving themselves an incredible unfair trade advantage. Absolutely.
I mean, it is a license to steal. People used to think that the specialists had a license to steal. I mean, this is phenomenal. And they're making hundreds of billions of dollars. They're draining all of the pension and profit-sharing plans. The people who are managing money at a tremendous disadvantage. And only 8% of the trades in the New York Stock Exchange now are individual trading accounts. The 73% are black box, these algorithms. And there's no liquidity in the market.
But as best you can tell, specifically, we know they started shutting down the European stock exchanges. Right before that, they were in free fall. And so to cover positions, the info you have, correct me if I'm wrong, is that big outfits dumped a bunch of stock. The contagion spread. In the 5 minutes they weren't watching, it dropped 1,000 points. The computers kicked in and drove it back up 1,000.
Well, I don't know about the computers kicking back in and taking it back up 1,000. I rather suspect the government was behind that when they started plunging. They probably went all out and bought the different derivative contracts to run it back up again. That's what
I meant. I meant the government computer system, because from what you and others have said, that's pretty much pre-programmed.
I think that is, and it goes far beyond that. But you know, we can accept the fact that there should be some sort of method of keeping the market from plunging 1,000 points in a day, and a working group in financial markets plunge protection team could do something like that, but not what they're doing. They are raping, and that's not what this was designed for, and it's got to stop. The executive order has to be killed. In fact, I think there should be no executive orders.
All right, Bob.
Just like I don't think there should be lobbying or campaign contributions or Patriot Act 1 and 2 and a Fed Reserve, and I can go on and on.
All right, Bob Chapman's going to be with us 20 minutes in the next hour, so plenty of time for your Twitter questions and your live phone calls on air. Chris, Pastor Al, Matt, Fred, many others that are patiently holding. But shifting gears for just the next 5 minutes, I want to bring Ted Anderson up with us. You know, I don't tell people financial advice. I tell people what I personally have done. I bought most of the gold I have when it was 280, 300, 400, 500, and I haven't sold any of it. I personally didn't buy it as an investment. I bought it as an emergency backup, and I've still bought some since it went above 1,000. But every analyst we have on says it should be above 2,000, 2,500. It's now come out with the Goldman Sachs, J.P. Morgan whistleblowers that they are suppressing. That the Gatto lawsuits are correct. That's been in testimony now on C-SPAN. So all of this is starting to come out. We know they're trying to hold gold down, but they can't. It's up over $35 in the last 2 days to $1,209.80. So $1,209.80 right now. Silver is way up. What do you see happening in the gold and silver market?
Are you asking me, Alex?
No, I'm asking Bob. Then we're going to you, Ted. I want to get your take, too.
She's the best analyst in the world right now. And she said, we're going to break out to a new high. We'll go to 13 to 1,500, and then we're going to go up from there. She says this is a super bull market. I agree with her, and that's where we're going.
Now, and let's be clear, Ted Anderson, and I haven't seen these numbers in the last hour, but if people think gold is way up here in the United States, they haven't even looked at Europe or Asia.
Europe and Asia right now are seeing gold at the peaks that they've never seen before. I mean, yesterday we had a run out of the European currencies into U.S. Treasuries and gold, both of those hand in hand. So gold is up, and so was the dollar. Now, today, gold is up over $15 since I talked to you yesterday on the air, and the U.S. dollar is now falling. So obviously the run to Treasuries has stopped, and now they're running into gold specifically because everything's down. I mean, you look at the indexes across the board, the Russell, the Dow, everything's down. It's in the red, but gold is up and silver's up right now.
Bob Chapman and then Ted, explain that in layman's terms. Normally the globalists can balance things. They drive one thing down, they jack something else up. But now we see this gyration accelerating, and it's a coordinated global downfall, is it not?
Well, I think it is, but I think it's gone out of control. And they are no longer able to control in totality the gold and silver market. All they can do is influence it for 2 or 3 days at a time. And that's allowed me, because of my recognition of that, to be so right. I don't encourage trading, but were you to trade by what I've said for months and months, day to day, you would have done very, very well. And but normally, gold and silver don't go up when the dollar's going up. But I said a year ago, if you remember, that the dollar had decoupled from gold. It was on its own. It is another currency, and that's what it's been for 6,000 years.
Well, Bob, that's one of the Twitter questions. I want to get Ted Anderson's take on this, who's also an expert on these issues with a great track record of predictions. Looking at this, normally when the dollar's going up, as you said, gold goes down. Now you have the dollar going up in the last few days. Now it's going down, and gold's still going up. But separately, crude going way down and gold going way up. So all of the normal rules are now upside down, just like the summer. Going back, I've looked at over the last 100 years, is almost always a bad time for metals. Here we are starting the summer, and gold and silver have got a rocket tied to their back.
I'll add to that one right now. 6,000 years ago, when the kings are being buried in the Egyptian tombs, they were putting gold in there because gold was money. Paper currencies like this fiat system that we have right now developed from gold, and they were just certificates of deposit that were being traded amongst merchants. Now we're sitting in this position where gold has been broken away completely from paper currencies, and the reason for having gold as money has been forgotten until now. Now you have Europeans, Asians, people in the United States, South America, Africa, you name it. They're going to gold for money. They're not going to gold because they're looking to speculate or anything else. They're going to gold because they know gold is money and it'll hold value, and it doesn't have to be tied to what the politicians are doing because they're destroying our world, and so are the banks. And gold is separate from all that. It's like the ultimate safety hedge.
Well, you know, we told people buy gold when it was 300, when it was 500, when it was 1,000. And Ted bought a bunch of gold and silver in the last month when it was a lot less. He can still pass on the savings of the lower prices of gold and silver. It's like you have a time machine and can go back in time and get a better deal on gold and silver. I hope people take advantage of it.